Hello everyone, welcome back. This is PK from the Black Box. So on the previous video I have showed you euro dollar on the monthly time frame. As you can see, this was the previous setups that I have showed you, and I have told you some secrets too, that you gotta protect yourself when you draw that black box, right? So as you can see, we had 12 or 15 setups. As you can see, when you count it here, nice buy. We had a buy, we had a sell right there, and we had a buy 4, and we had a sell. I'm sorry, that one a sell 4. This one was a buy, and then ended up being the third model, which is a single fake out, and then we sold that thing. Right, in both ways, great, because we trailed our stop, right? So what happened next? We bought, right, this thing, and as you can see, look where it went. And we are selecting specific points. We are not entering at random places. So you can see 5 trades right there. The 6 buy, 7's buy, 8's buy, 9's sell. Beautiful sale right there. It was beautiful. 9's and then 10's sell, 11's sell, and 12's what? Buy, right? 12's was buy, and then 13's buy right there, 14's sell, 15's right there was once buy TP hit and then sold. We sold that thing, right? As you can see. 16's, right? 16's this one buy, 17's sell, 18's buy, then 19's sell, and then buy right there, single fake out, third model. Then 20's sell, 21's sell right there, 22's sell, the 22nd, I'm sorry, 23rd sell, 24th sell right there, 25th buy, 26th buy, 27th sell, 29th, as you can see, buy right there. Nice. To where we are right now, as you can see, it's beautiful right there. So let me end this thing. Let me remove all the drawings so we can go to the weekly time frame. You press 1 and W, and then you press enter. Right? So let's get into it. Let's catch those pips, right? So our black box is really God-given. It's crazy. It is crazy. Look at this. So let's start from here, and we will be ravishing. We will be looking at every opportunity, right? Everything, and hopefully you will learn something from this, right? So, as you can see here, let's start from here. Let me zoom in so you can see better. What do we have here? Three candles in a row. We had 3 candles in a row right there. What is this? This is beautiful. This is just beauty right there, right? TP hit, boom. Okay, how do we know that? You measure the head right there, boom. TP smashed right there, nailed it. It's beautiful, freaking amazing. And you trail your stop up. This is, remember, this is a weekly time frame, right there. We're talking about the weekly time frame. Each candle took 1 week, 7 days of trading, right? 5 days, I'm sorry. So this is Forex. So it trades only from Monday to Friday, not crypto or the options. I don't know about the options, so maybe the binary options. I meant binary options. They trade all day, all week. As you can see, this thing moved up, hit stop 50% out as always. So never changes. That rule never changes. As you can see, 50% out, stop loss trailed up above your entry. You entered right there. As this candles broke outside, as this candle breaks outside, and then your stop loss will be above your entry. So when the market comes back, you don't care. You don't care. And then what happened? We got another 3 candles consolidation right there. This thing was a little rough, as you can see. This thing broke, we bought, and then stop loss is down here as always, nothing, right? Unless that TP is hit or close to that TP, the first TP that is the height of the box, then we do not touch that stop loss. Don't touch it, right? That stop loss will never be touched. Okay, don't touch that thing, because the market still comes back, supports, and as you can see, like it did right here. So it came back, consolidated again for weeks, and what happened is finally broke, right? Finally broke, TP hit right there. TP was nailed right here, right there. Okay, so now what you're gonna do is you are trailing your stop. Once your TP is hit, you trail your stop above your entry, you trail above there. Maybe if you trail it too close, then you would get out by this support right there. As you can see, let's zoom in. But when if your stop loss is above it, then this market cannot touch you, okay? Above your entry. Do not be greedy. That's why I tell you, do not be greedy. Don't be greedy. Already 50% is out. You are already in profit. What is the point of um, trailing your stop too close? When the market goes one step, you trail it one step. When the market goes two step, you trail it two step. Don't do that. I'm telling you, that will never work for the long run, right? So what you're gonna do is be calm. Calm yourself. Calm yourself. This thing will play out. This thing will play out. We have four models. As you can see, mostly the first, the second, and the third happen. The fourth one doesn't. You can say it doesn't happen most of the time. As you can see here, this is the fourth one right here. Double fake out on the weekly time frame. As you can see, this market faked us out in both ways, as you can see, right? So actually this thing came up, and then what it did was it hit our TP. You can measure this thing. Your TP is hit, no joke about it. So you can see with that candle right here. This candle didn't finish the job, but this candle did. Look how clean that is. It is crazy. Why would the market deliberately comes to your take profit? It is crazy. It's crazy. As you can see, there is something about this consolidation's hate. It is crazy. There is some correlation. There is some relationship right here. So as you can see, it broke to the downside again. So we close that thing. Let's copy this thing and let's paste it and place it down here, right? As you can see, exactly just like this one, this is also hit right there. TP hit, boom. After that, the market retrace. When the TP is hit, you gotta retrace your stops. I'm telling you, gotta retrace your stops below your entry when you are selling, above your entry when you are buying, so that when the market retraces, you don't get caught. Because as you can see, double fake out happened, but out of 100%, I would say that only 5%, yeah, 5% would happen out of the 100%. They are rare, very, very, very rare. Right? They are very, very rare. They do not happen a lot, as you can see. And if they happen, they hit our TP, so we don't even care. We don't care. And then what you do next? You enter a buy. Where? Right there. Right there. Right, that market. When that market broke the upper lead, the upper band, what you're gonna do is you buy, and then this thing came back to your stop loss around here. Your stop loss will be around here, but you could place it down here too if you are more conservative, or if you have deep pocket, right? Or just your entry at first, your lot size has to be lower. Don't trade this thing because you win every time. It doesn't mean you would enter 100 lots in one trade. Don't ever do that. The market will fuck you. It is it, it will happen. Believe me, it will happen. Even the black box cannot prevent this market's uh, this market's movement. It cannot predict, right? But most of the time those four models happen. That's why we are depending on it. We are depending on the black box because those four models happen a lot. That's why we are selecting a specific place. We do not enter right here when the price is trending. We do not enter right here. No, that is where the place where we take our profit. That is the place where we take our profit. How? You enter the buy right there, I'm sorry. And then it retraced. Don't panic. Your stop loss is down here, not at the exactly the lower band. No, below that. I didn't tell you to place it exactly at the box. Place it down below, okay? A little bit below. When you are using supply and demand zone, just like this one, let me show you, right? When you are using supply and demand, as you can see, the market came back, right? You want to sell this thing because this is a supply zone, right? Based on the previous price action, when it came back, when you see the price action before what was this 2002 right here, 2002, this is a 2002 trading right here. So before 2000, that's 1990 or 1918, there will be some kind of swing high like this one. Believe me, there will be some kind of swing high. They will not stop without a reason right here. So based on that, you would place this box and you will sell this thing, right? You would sell this thing because this the price came back. So now you are expecting using the supply and demand, you are selling this thing. Where would your stop loss be? Right above there? No. It has to be above this thing, this box. It has to be above the box. When you are trading supply and demand, let alone the black box. The black box is very strict. The black box is very tight. It has a very tight stop loss. It has a very strict trading rules, and they are very simple. It is crazy. Like it's like a second grade mathematics. It is crazy. It's like addition and subtraction. There is no divisions. There is no pointers. There is no decimals. You have to do. It's like 4 divided by 2. As you can see, you could have both that thing, your stop loss down here, right? So the same thing happens. You never panic. Never panic. Don't do it. You are already in profit in those 2 trades. What the hell do you want more than that, right? So you are risking more to get more. Right? You are risking your profit to get more, and that risk, you took that risk not because of some random price action came back, some random bullshit, some moving average crossed over. No, the fourth model, the third model, the second model, or the first model happened. That is the reason. That is the reason that you took this trade. You have a reason. When you have a reason, your mind will rest. Your mind will rest, right? Your mind will be in peace. When you are in peace, when you are calm, right? You think straight. You will think clear and precise. Your entry, your exit will be precise. They will be like a flow, like a water flow, smooth. They will be like smooth, right? You don't even be surprised when that thing plays in your favor. It's crazy. Believe me, it is crazy. You will be amazed. As you can see, you would wait for your TP hit right there, the same thing as you have did on both trades right here. You get out TP1 where? Right there at this candle's high. Then your stop loss where? Right above your entry, the same thing. And then let the other run. When this thing moves a lot, you trail it. When this thing moves a lot, you trail it. When this thing moves a lot, you trail it. Okay, do not trail it too close. You will get out by these kinds of pullbacks right there. Because as you know, markets move in an impulse and the pullback. An impulse and the pullback, right? So you don't want to be caught by that pullback. And the market would go in your way and you would be disappointed, you would be annoyed that you trailed it close. As you can see, this thing hit TP4 and it never stopped. It moved lots and lot of pips right there. If you measure this thing, this is monster. This is a monster movement right there. As you can see from your entry to there, that is a 1000 pip movement right there by itself. But you would trail your stop halfway, so you would get out around here, so that an 800 pip movement right there, respectable. It's beautiful, beautiful. Beautiful in both ways. Trade, nice sell, nice buy right there, and then nice buy again to 3 trades, and those all are successful. It's crazy. It's crazy. What do we have here? 1, 2, 3. We got 3 of them. Fourth, no wick, no nothing. It is beautiful. It's just beautiful. Then you connect it like this, right? That's it. You don't gotta do nothing. You don't gotta worry about anything. That's it. You need a box and a vertical line to determine your TP for the box's head, and then you need your Fibonacci. Your Fibonacci will tell you the TP series, but you don't need that thing, right? So you can trade your stops after taking your 50%. That's a beauty right there. As you can see what happened here. This thing broke, right? Stop loss right there. I'm sorry, 50% out. Half of your trade would be out right there. Your stop would be below your entry. Now there is nothing to worry about, right? You go to your business, and after an hour or something, you can check that your trade, right? So there is nothing to worry about. Your stop loss is in place. It will protect you. And then the market collapsed a lot, then you would trade this thing a lot, so you would get out by this big candle right here. Okay, the people who didn't touch that stop loss right there would benefit from more runs like this one. But so that's why I'm telling you to do not trade yourself too close. When you trade too close, you can see this candle could get you out of the trade, no, let alone this one, right? So actually this thing moved a lot to the downside, so you would consider this thing as moving, but trail it not too close. Around here, around the pullback is a better place to place your stop. Where? Right there, right there. That is a pullback, right? And then the market pushed more, then came back, right? That is a pullback again. You place your stop right there above that. The market consolidated and boom, melted. That is your pullback right here, right? You place your TP right there, and then this thing came back and got you out of the trade, as you can see. So based on the Fibonacci, to get most out of your trade, your TP series around here, right? When your TP series hit, get out or trail it, okay? When your TP series is hit, you can trail it too close, okay? Because when TP series is hit, the market will retrace back. The TP3 and TP4, they have a lot of problems. So as you can see, what do we have here? Nothing. Only 2 candles, nothing here. There is nothing. Maybe on the monthly I showed you there is nice sale right here, but on the weekly, nothing. Absolutely nothing right here. Okay, then you pass it. Then we got 1, 2, 3, 4 rising. Beautiful, beautiful setup rising. You connect everything. As you can connect everything, then what happened? In this case, this thing came back, right? You sell that thing. You sell that thing, and you measure that TP. I think in this case the TP was never hit. So yes, it was never hit. It was a little bit too close. Maybe we can consider this thing, these 2 candles right above there. So then you can place it up there, right? So in this case the TP is hit. In this case the TP was the second candle, right? So 50% out, stop loss down below your entry. Right, so the consolidation started 1, 2, and 3, right? The third candle broke, but if you connect the whole thing, these things, then it would be like this, then it would be like this. So in this case your TP is not hit. You were in profit, but that thing came onto you, came back. That thing came back, right? And so that's why I say that when this thing moves a lot close to your take profit, as you can see, this is too close, very close, as you can see. So fake outs, most of the time, fake outs, this third model, the fourth model, most of the time what they do is they come too close to your TP, and most of them hit your TP. But some of them come close to your TP. As you can see, this is very close, very close. A little, a 1 pip movement could fill this thing out. I mean, not 1 pip. It is a weekly time frame, so it could be 20 pip or 10 pip right there. So a little poke right there could fill this thing. So when this thing comes close to your TP, what you're gonna do is you trail your stop half. I mean, not half, below your entry. Below your entry when you are selling. When you are buying, above your entry. Okay, above your entry. And when you do that, as you can see here, you could have bought this thing, right? You could have bought this thing. So what happened here is this thing went up, and before going into your TP, what it did is it supported. So if you have trailed your stop up, you will get out, right? So in this case, it is contradicting the logic right here. So what we're gonna do is we're gonna accept this loss. We will accept this loss, right? There is nothing we can do. We will accept this loss, and next we will buy this thing, right? Unless that tip is hit, we will never touch that thing, right? So as you can see, the first sale was a loss. We were in profit. Some people they do not, when they see blues, oh, come on, I'm not gonna give this money, bro. I'm not gonna give this money. I gotta get some portion out. I gotta pocket some portion into. I gotta place some money into my account, right? And they are shaky. They do not rest, right? So those people in this case would be would be right, because they pocketed some portion of their trades, and the market came back onto their stop loss, right? Your stop loss is up there as always, no touching. You are not gonna touch that thing, but it is right there. It is right there. So in this case, when you see it on the weekly time frame, if this week was not formed, our TP was hit right here, right? Pay close attention right here. If this week was not formed, this candle came back and closed right there. So this is a huge consolidation, right? This candle came back below the 50% of this box, and what did it do? It went up. This is a consolidation also. And this candle, to make it worse, it came back and closed right there, right exactly at the first candles, as the bullish candles close. I mean open, right? So this is a whole, as a whole, it is a consolidation, right? If that candle didn't come back, and if that candle didn't come back, we would mark it like this one, just like this, and we sell right there, not down here. We sell right there, so our TP would be hit right there. But in this case, this is a consolidation, so we gotta accept the loss, the loss. So from these trades, 1, 2, 3, 4, 5, 1 lost. We lost 1 trade right there. There is no covering or anything. This is a learning opportunity. We do not cover anything, right? As you can see, we got 1 loss, which means 5 out of 4 was a winner. 5 out of 4 was a winner. And We know our setup, and what happened? This thing didn't melt it down. If this thing melted down, never came back, then we would assume this consolidation is over. It is over. But this thing came back up into this consolidation, broke the upside, we buy. Stop loss where? Down here. The same thing, nothing changes. Down here, our TP above there, right there. So we bring that thing up. You bought again. The third candle would fill you, and your TP3 would be up there. And your lost money is now where? It is in your pocket. It is in your pocket. TP4 riser hit, then you trail your stop to close. You can't trail it to close after TP3 is hit. You can't trail it to close. So you can this never came back. You trail to close. Close, and then this came back, and you trail close riser. Then this is a huge pip. This is no joke. So you can see this is huge riser. You will get out around there. So that is a 900 pip movement. 900. It's crazy. 900. But you have lost what you would enter right there, right? But on the previous sale, let me measure the pip. Up, right? That is your stop loss up there. You had lost 200 pips right there. You had lost 200 pips and made how much? 900 pips. That's crazy. That's crazy. It's beautiful. It's just beautiful. As you can see, nice trade riser. So we have learned a great lesson riser, right? A great lesson. The one who are following this teaching will benefit a lot. They will benefit a lot. As you can see, what do we got here? A consolidation. No joke about it. Why? This thing came back and started trading down here instead of going up. Right? This thing came back, started down. This thing closed, this thing opened, traded down, and boom. Right there you buy. The third candle. We are interested on the third candle and the fourth candles, right? As you can see, TP hit, I think. I'm sorry, let me measure that thing right there. Okay. Place it, yeah. TP was nailed, right there, nailed. If that was not enough, this thing came back up and nailed it. 50% out. Where is your stop loss? Above your entry. Beautiful tree right there. So using the third model, you can sell this thing, but this is only a 3 candle consolidation, so it is never trusted. It is never trusted, right? So when the number of candles trading sideways increases, the pips will increase too. The number of pips the market will move will increase, because that's a lot of orders, right? They're being compressed with a certain period of time, right? So that order should have to be delivered to one direction, right? They are not there for no reason. There is something going on in that area. There is something going on in that area, and there is you won't get a smoke without a fire, right? So if you see a smoke, there is a fire around that area. So you gotta go there when you are cold, right? Or when you want to cook something. So as you can see, this thing came back up, TP hit, and then 50% out, beautiful trade riser. So you could sell this thing riser, boom, smashed it, but TP never hit. Don't touch that stop loss. Don't touch it. This thing has taught us something, as I have told you, to never touch that stop loss until this TP is hit. We will never move that thing, never, because we will make a lot of money. Even if this thing fails, another 900 setups, we will get a lot of setups. So no worries at all. So as you can see, this thing melted down, supported, supported, and finally below melted down and hit your TP. Where exactly? I don't know. Around it. It might be around you or this candles right there. Then it is time to trail your stop. Then came back a lot, and then you trail your stop halfway. TP3 was not hit in this case. What you gotta do is you trail it not too close. Do not trail it too close. Once TP3 a little bit, but never hit riser. So nice trade riser too. What you gonna do in this case? You're gonna do it like this. Right? So what happened here? Third candle, the fourth candle, the fifth, the seventh candle broke out. So you buy that thing, right? You buy that thing right there. So TP right there hit, and the one thing that you gotta catch in here is, as you can see, you can see some poke right there, right? You have seen some poke. You gotta wait for a further movement. That's why some traders on YouTube are telling you to wait for the close outside the consolidation, but we never wait for the close. What we are gonna do is we wait for some time until that thing advances a lot, and then we will enter. We will not enter a trade when the market focus a little bit. No. That's not what we're gonna do. We wait. We see the candle's momentum. We see the candle's speed. Alright? We see the candle's peep. I mean displacement. We gotta see everything. As you can see, this thing poked a little and immediately retraced back. What the hell? And it never came back to that one. We are interested outside that box, not inside that one. So it retraced to that side, to the inside right away. No trade. There is no trade. You gotta wait. You gotta have patience. Patience is the king right there. As you can see, this thing moved a lot, and probably formed some kind of weekend, moved a lot again. So that's where you buy right there. You buy, boom, your TP is it. But in this case, it didn't move a lot. It is a little thick, and that is, as always, will happen always. That can be counted as a third model. You can reverse engineer that thing too. I have seen it a lot of countless times. It is crazy. It is everywhere. Before going into the intended direction, they fake you out. A little, a little bit. They touch it a little and get everyone out. If there is a stop around here, and they get to a cheaper price, and they look what they did. They never looked back. As you can see, there is no pullback right there. Do you see any wick? Is there any wick? No wick. There is no wick. After this thing filled that thing, after this thing made this wick, what happened is it never looked back. It never. This is a morning star. A morning star is a bullish reversal pattern, right? As you can see, this happened. This was a huge bearish candle. As you can see, huge rejection, and we got a wick around there. So we know that wicks are gonna be filled. So when we zoom, we can see the precision a lot. So it get out right there. So using that, another secret, put it on your notebooks. Write it. Believe me, you will encounter this thing a lot. So we gotta wait. We gotta have some patience. When the breakout happens, we don't ride it right away. Right? We gotta wait some kind of advancement. Okay, because that could end up like this one. That is a huge lesson, right? And then your stop loss up to zero, and this thing came back and smashed out of the trade. As you can see, this is not a consolidation. Why? This thing never traded below the halfway right there. This candle's halfway should be traded in order to be a three candles consolidation. In order to be the black box, these candles, the two candles, should trade down. But when you measure these things ahead from this, what you're gonna get is interesting. Nothing. That the yellow part that you are seeing is what? It is a halfway of this candles. I mean, this consolidation right there, this black box. That is halfway, right? Oh, really? Or wasn't it? Or the 50%? Oh, right. So that's 0, that's 23, that's 38, right? And that is 50. Okay, that is 50, but we never trade. A little poke, and this thing never looked back. So that is not a consolidation. That is not a consolidation. Consolidation is, as always, as I have told you, like this one. It has to double down. It has to, I mean, it has to compact. It has to be compacted, right? It has to be compacted, and never that kind of thing. It traded up above the top, and it never looked back. It went. So we don't care about that. We don't care about that. That's not the black box. That's not our business. And when you see this, oh come on, man! Look what you did. We missed a lot of people. That's thousands of people right there. So what? So what, man? This is only a single moment that you have seen this thing play out. But most of the time, this never happens. This never happens, bro. I'm telling you, you gotta wait for that 3 candles. Just like here. This is beautiful, right? Why? It traded up. That is a beauty. That is a beauty, right there. 3 candles. After these 3 candles have been formed, you gotta connect them like this. Okay? You gotta connect. When you see long wicks just like this one, you gotta connect the bodies, not the wicks. Why? Because this thing could move up to fill the wicks. When that move happens, we enter a buy right here. That's this. In this case, it never happened. It went to downside. It fills this thing, so you sell that thing. You sell that, right? So your TP would be hit right there around here, 50% around there. Then this thing advanced, and then halfway right there, and this thing came back and got you out of there. Beautiful. No worries right there. Interesting. What do we have here? We have the third model. We have the third model right there, right? So what happened here is crazy. It's crazy, bro. It is crazy. What you're gonna do is you enter a buy right there. You enter a buy, your TP will be projected up. As you can see, your TP hit right there 50% above your entry, half out, right? Half out safe in your account. So you can see smashed you and got you out of the trade. You enter a sell again right there. So you enter a sell again, and the thing that I have told you earlier happened right. As you can see, when the third model happens, you got your stop loss has to be where? Right there at the swing, guys. When we are buying at the swing lows. So as you can see, if you had put your stop loss above there, this thing got you out of the trade, and look where it went. It's crazy. It's crazy. Maybe it is one thing has to cover these things, whole thing, right? Just like this one. But I don't think that's the case. Okay, I don't think that's the case, because these are long wicks, they are never equal. And the other thing is, when you connect this thing just like this, when you identify the trend is just like this, right? The trend is just like this, so this box should be around there, right? Around there. So in this case, let me bring that TP. Yeah, in this case also TP is hit beautifully, nailed it right there. So that could be the case. Okay, if that is the case, then what happened here is there is no fake out around here, so it's the same thing. So we gotta cover everything in this case. When the wicks are short, you gotta cover everything, right? So you can see this thing, and you can cover this thing if you want this thing, just like this one, and you can sell this right there. You can sell this thing right here. That could potentially fake you out. So all you gotta do is go to the monthly time frame or something, right? But when you go to the monthly time frame, you do not get you will get 2 candles, maybe 2 candles when you encounter these kinds of things. So all you gotta do is What the hell is this? As you can see, only one candle. This is crazy. On the monthly, as you can see, it's only one candle. We got only one candle right there. So on the higher time frames, you cannot see this thing. But if you uh, encountered that thing on the 2 hours, then on the 2 hour time frame, then you could go to the 4 hour and you would get some clarification, right? So, oh man, where do we go? So right there, this is the dinosaur time right there. The dinosaur time. Okay, let's pump it, let's go, let's move. So that is the thing right there. So that's the thing. So all you gotta do is what? You gotta put your stops to your the swing side, right? You gotta, this is the body, this is the body, connect the body. That's it. That's nothing more. Nothing more. Put that thing up. I mean your stop loss up there, right? As you can see, smashed up. So I have seen these kinds of things, right? So when the third model happens, many people put around the upper parts of the box and they get out before this thing moves further. So your stop have to be up there, right? So that's it. And then TP hit right there, around there, and then the other will run and will get out around it. So we got another here, trade, boom, TP hit right there. Yes, TP was hit right there, so no worries at all. There is no worry, right there, nailed it by that candle. It is so convenient that this candle formed and traded down before moving down. It's just crazy. It's just crazy. Then the same thing happens, okay? Trail your 50%. In this way, you connect this thing like this, because they are almost equal. They are almost equal, so you connect this like this. This is a huge consolidation, so when you connect consolidation, when they are short, you gotta connect all of them. All of them. So when the wicks are short and they are equal, you gotta connect all of them. No room for fake outs. We don't want to leave room for fake outs. As you can see, this thing broke, then moved down. But in this case, what happened is TP was not hit. Huge TP riser. So, or was it? It wasn't. It wasn't. It was. Oh my goodness! Look at that! Look at that craziness! It is crazy. Look how close it is. I think this thing is smashed. I think this thing is smashed right there. It's crazy. And see, yeah, this thing is hit. Yeah, it's hit. No joke. Is it exactly right there? Then you'd get out. So 50% out. Stop loss above here. This thing consolidated a lot, and this candle will get you out, right? This candle. So we got another one right there. How do you connect these things? The lowers. You connect the lowers, all of them. These are short. They are short. We don't want to leave anything. But this here is long. Don't touch it. Longest do not cover. This thing should be on your notebook right here. As you can see, TP hit, boom. Let the other 50% run. Do not touch that thing. It moved a lot, so you trail half, and then this thing got you out of the trade. But this thing, it didn't move a lot, so you don't even care. What happened next? Beautiful thing happened. Right there, beautiful thing. What you gonna do? You connect like this one. 3 candles in a row, beautiful. So what happened? This thing broke. Okay. Before this thing broke, this thing traded up and then broke. It's crazy. And then you sell that thing, TP hit right there, 50% run. This thing moved a lot. Then you trail halfway. The trade is taken care of. Trade is taken care of. Next, what happened? This consolidation happened. This consolidation happened. You buy right there, then you measure your TP. What happened right there? let me make it. Yes, right there. Yeah, smashed the TP. Boom, you are out 50% above, and this thing smashed you, and this thing now consolidated again. What you gonna do now? You connect this thing. Why? This big candle, this big candle went up, right? This big candle went up, right? There's three candles formation right here, okay? Or you can close this thing, and after the TP is hit and this thing smashes up, you can enter a buy right here, because this is still a consolidation. This is a support, break and retest, okay? Do not forget about the four models. They will help you navigate the market a lot. They are very, very helpful. What happened here? We got three consolidations. You can connect the whole thing just like this one, or you can connect the inside candles just like this one. But I recommend you connect the whole thing, because fake outs would make you pay. Fake outs will make you pay. You gotta be careful. As you can see, TP nailed right here. As you can see, wicks will be covered. Wicks will be covered. So by using that tip, you will be buying this thing once this thing breaks. Then halfway, 50% will be halfway, and this moved a lot halfway. This thing moved a lot halfway, and then this thing smashed you out of the trade. And what do we get? What did we get again? As consolidation. Beautiful, right? This is short, so you gotta connect the whole thing. This is short, you gotta connect the whole thing. You broke to the downside, right? This thing, this is the hit, this is the TP. Unfortunately, the TP was not hit, and then what happened? We smashed it to the upside. And then what happened? It came back to your TP right there. To your TP. Isn't this convenient? It is crazy. It is crazy. Why the hell would the market come back right there to hit my TP right there, instead of going up just like this? It's crazy, and as you can see, you will be filled. You will be filled, but this thing took around 1 month of trading, so it is for swing traders, not for us. But this thing, this very thing would happen in the 2-hour time frame, right? If you are an intraday trader, most likely you are. So as you can see, we got three candles again. You connect it like this, three candles. These are short, so I'm gonna exist thing like this one. So that is why I tell you the first rule, the first rule that I told you, you gotta wait for some kind of advancement, not this kind of poke. We don't want this kind of poke. This is nothing. This is nothing, bro. What the hell? We gotta see some kind of advancement. This is a poke. So finally the market retraced back, and this is we broke this thing, and we are saying that why the hell is the market not coming back? That is a sign that that is a fake out. That is a fake out. A little tick, and it never looked back. As you can see, it broke. That is a huge break right there, not a little poke, just like this one. There is a difference, a huge difference right there. So what is the lesson here? You gotta wait, wait, bro. Don't jump in like you are swimming in a lake. Alright, what you're gonna do is wait for an advancement like this one. This is a huge move right here, not this one. This one is not a huge move. Once this thing moved, retested and moved to your TP straight, then you trail your stop. Boom, this will get you out. Beautiful. And then what happened? This thing is not equal, so what you're gonna do, you connect it like this, right? But if you want to be conservative, what you're gonna do is you can connect it like the whole thing. The whole thing. What the hell, bro? My money is not safe, bro. I gotta connect everything and eliminate every fake out. Or if that is your way, then what you're gonna do is you connect it like this, right? So you'll not be faked out. So as you can see, what happened here, this is not a very long wick, the first one especially, but this one was very long. So this thing never poked it, a little poke, but never moved. So the same thing applies. We have found 3 little pokes that never went anywhere. So we don't even care. We do not put our money online due to these fake outs. So what we're gonna do, we wait. Waiting is one discipline. It is one key part of trading, right? Key part of trading. So professional traders know how to wait. They know how to wait. They know the right opportunity. They wait for the right opportunity. As you can see, what happened is it smashed the downside. But what happened is it is crazy. So in this case, when you see long wicks, you do not, your TP is not that one. Take this note too. Your TP is not that long wick, because only 2 weeks, and this week is very very long, and we do not count it as the TP. Instead, what we're gonna do is your TP is this body, the body right there, the 3 candles right there. So you're gonna do is look how precise it is. It does not get any any crazier than this. Just crazy. This is crazy. I didn't do this just because the TP was noticed. Nope. Nope, that's not the case. You can watch every other video of mine on my YouTube channel. It is crazy. Everywhere. I tell you too, your TP is the bodies. Right? When you see long wicks, your TP is the bodies, not the wicks. The wicks are just manipulations. They are not the part of a consolidation. They are manipulations. They are abnormal. They are not normal trading. When you see long wicks, like in crypto, like in Bitcoin, some long wicks moving long, uh, uh, 4,000 pips and coming back, that is not normal. No trader can launch that thing up right there, just like that. That is some dirtbag doing some crazy shit behind the scenes. So that's not normal. That we gotta stick to the normal, okay? As you can see, TP hit right there. This one too. This is TP hit. Stop loss. Boom. So you know your business. So don't ask me anything. Don't ask me. I'm just joking. Okay, comment any questions. If you got any questions, just comment in the description below. I will answer it. I will answer it. So as you can see, the same thing here. TP hit 50% out. Let the other run. Stop loss up there. Don't touch that thing. Don't touch that thing. And this thing moved a lot, then you trail it. This thing moved a lot, and then you trail it. This thing moved a lot, and then you trail it. This thing moved a lot, you trail it halfway. And then finally, it's time to get on. No. Go home, bro. The money you got is enough, right? So tomorrow you will get some more. Today, that is it. That is it, okay? Don't wait for some cash to land on your hands, right? That's not gonna happen, because the markets move in a pullback and impulse, pullback and impulse, pullback and impulse, pullback, and so they cannot go in a straight line. So it is uh, it is what it is, guys. It is what it is. As you can see, nice trade, right? What is here? What do we have here? Nothing. There is nothing. This is trending, so there is nothing. We jump like a cat and come here, and our eye immediately catches this thing. We connect everything. Why? This is beautiful block right there. Beautiful. It's crazy. It is crazy. Let's pump it and come back here. The same thing, the same shit. And as you can see, this thing smashed the TP. Stop loss down below your entry. Don't touch that thing. This thing never went a lot, so don't touch that thing. And this came back and got you out of the trade. We wait again. What happened here? Another consolidation, right? This thing traded below down here, but this thing was halfway, but this thing moved a lot down. As you can see, non-existing. This is a huge consolidation right here. No joke about it. It is not like the first thing that I showed you right down here. I don't want to return back. You can check that thing yourself, right? So check that thing yourself. This thing moved back a lot. So in this case, this is abnormal weak riser, so you connect it up there. When you see long week, you connect the short one. So in this case, what you're gonna do, your TP will be this body right there. Boom. TP nailed right by this candle. Stop loss up there. Boom. Smashed up. Stop loss up there. Boom. Smashed up. Stop loss up there. Boom. Stop loss up there. Finally, you are out. Get out of here and go to your home. Sleep. Get some sleep. Profit time is over. And then we got another one. If you have missed that trade, then we got another. You buy that thing, boom, smash the profit right there. I mean that one's the third candles, right? Then you lay the other one, boom, the same thing. There is no new, nothing new here. There is nothing new here. It's the same thing, the same shit over and over again. So it broke the down. You sell. This is a huge breakdown. So this is not a poke. You sell that thing, smashed you up. That is a retest, of course. That's gonna happen. TP hit right there. Please don't make me measure this thing, bro. Don't make me measure this thing. It is exactly the TP right there, as you can see it. No joke. No joke around here, as you can see. Right there, smashed. And you do what you gotta do, right? And then we got another one right here. You connect this thing right there, as you can see, this thing right there, bodies, the bodies. So fourth one broke, sell, stop, I mean TP hit, boom, stop loss down here, no worries, this thing smashed up to the upside. You are out in profit. Beautiful trade right there. And here nothing. It is crazy. This is crazy. On the monthly, this could have some kind of consolidation, but on the weekly, it's crazy, bro. What the hell is this? This is a consolidation, bro. This is a black box right here. So what you're gonna do? You buy that thing right there. That's the third candle broke, or this candle retest right there. You buy that thing, and unfortunately, this thing didn't hit your TP. It is unfortunate. It is just unfortunate. Oh come on, why is that? Why do you do that thing to me, bruh? Let's put this thing down. And this man never hit that TP, and that is crazy. That is crazy right there. Too close, too close, too close. So this thing came back and got you out of the trade right there. Right there, you would be out of the trade. A little poke. Okay, let's do a horizontal line right there. To make it horizontal straight line, just hit shift. Just press that thing. That is your TP. So your TP is never hit. TP right there, right? TP never hit, bruh. So there's nothing you can do. There's nothing you can do. Even if your stop loss is down here. So what happened here is down here. Of course, it's gonna be down here. Stop loss never hit, and that thing came back supported, and finally smashed you by this big candle. So there's nothing you can do. There is nothing you can do. So this thing never played out. You were in profit, but there is nothing you can do. These kinds of trades. So far we have lost two trades, and the first trade, what did we do? The first trade we profited because of third model. It retraced back and we entered a buy, and we tripled that because we lost 200 pips and we made 900 pips. That is 4.5 times our lost money, right? So that's crazy. But in this case, we didn't get anything, as you can see. This thing just consolidate on the monthly. When you see it on the monthly, it's a crazy consolidation, beautiful consolidation right here. So when you see it, when you encounter this thing around here, all you gotta do is go to the monthly and wait for that breakout, that holy grail, and you could sell that thing and look where it went. That is 9,000 people movement right here. I have tested it on the oh, this is the 3,000 people movement, right? Not the 9,000 is yet to come, and we will see it. This is just a 3,000 people movement. That's huge. That's huge. In a day, you would get only 50 people. So that's huge right there. 3,000, crazy. And then that's the loss. Our first loss right there. So nothing to worry right there. About. There's nothing to worry because we get a lot of trades. We can count the win rate, and as you can see, it's crazy setups. Look at this, beautiful. This is carefully selected. They are carefully selected. We do not enter anywhere, bro. No, we got something beautiful. We got some weapon attack method. We got some defense methods too. Our um, risk management technique is our defense, right? After entering the trade, or after the trade is in profit, or after the trade, if the trade is against us, the same thing, we would be defending ourselves. When we attack, we are specifically attacking exactly at the uh, like a sniper, right? We smash it separately. As you can see, 2, 4, 5, 6, and then 8. Yeah, 2, 4, right? 6, 8, right? 10, 12. Then we got 3, 15, and then 17, 19. We got 21, 22, 24, 25. Out of 25 trades, only one lost. Only one lost, which means the win rate scale, it is around 96% or 97% win rate. It is crazy. It's crazy. So it's amazing. Next, what do we got? The same thing right here. How do you connect this thing? You connect it like this, okay? You connect this thing like this. The same thing applies. You connect this thing, the loss, highs, and what happened there? The same thing, the previous thing. It a little poke and almost instantly smashed down. That's crazy. That's crazy. So what you're gonna do is you sell that thing when that thing breaks. Okay, when that thing breaks, so what you're gonna do now is you're gonna identify your take profit, right? So in this case, it never hit your TP. It never hit your TP, but what it did is when you bring it down here, this is a freaking force model right there. The freaking force model right there. No joke about it. That is the freaking force model. As you can see here, the TP was never hit and your stop loss hit again. No worries about it. There is nothing to worry about. As you can see, your stop loss would be hit right there. So not every strategy can give you 100% win rate. So I am being clear. I am being honest here, right? I am showing you exactly what the market is doing. I'm not adding anything. I will not add anything. It is for your own sake that I'm showing you this, because this thing will happen next. This thing will happen next week. This thing will happen next month. On every currency, on every indices, on US 30, Nasdaq, everywhere. It's everywhere. So it is better to learn it here and uh, prepare yourself on the battlefield, for the battlefield, right? As you can see, we were in profit and this thing came down, smashed us. Our stop loss hit right there, and then we bought that thing and this thing smashed us. And then what we're gonna do now, we sell that thing. We sell that thing, right? If this thing comes back, there is no trade at all. If this thing comes back and smashes that thing, we are going to the other currencies. We never touch this thing, right? So in this case, we lost one trade, In all of them, we were in profit, but you don't know what's gonna happen. So I told you, Zorus, when this thing happen, don't panic. Don't panic, right? Don't don't expect to win every trade, bro. What the hell? You will not win every trade. Nothing, no robot, no algo, no nothing can give you 100%. Every trader that is flexing over the Instagram or over the TikTok that their algo is perfect and it's giving them blues every time they enter the market. Uh, earlier, earlier I mean, um, before starting this recording for you guys, I was watching on IG some guy. When I enter every time, this algo is giving me profits, bro. So go over there and buy this algo. What the hell, bro? What the hell, bro? I mean, when I see his phone, I see blues, but that is it. That could be a one-time success right there, right? Every beginner trade can have that blues, but they are not consistent. Consistency is the key right here, right? Consistency is the key, uh, not beginner's luck. We do not need beginner's luck. We are consistent right here. So as you can see right there, the 3 trades that we lost paid off right here. Beautifully nailed it right here. It is crazy. It is crazy. Let's just measure this thing. It's crazy. As you can see, we entered the rise, right? Stop loss down here. Let us add this thing. It's gonna be fun, believe me. That is 410 pips. Okay, 420 pips. Let's say 420 pips. And right here, we sold right this thing, right? But it came up to us 420 pips. This is a 280 pip movement. 420 pip and 280, that's 600, 700 pip. We lost over 700 pip right here. And then we entered a buy, and this thing came back to us 700, and then we entered a buy right here, right? That's where we entered a buy. Then our stop loss down here, that is 310. What? What the hell? 300? Yeah, okay, let's say 300 pips. That is 1000 pips lost, right? 1000 pips lost. And let us say here, right, our first TP, we got 350 pips. 50 pips. And then we let the other run, and we got how much? That is 747 pips. And we let the other run, and we got how much? That is 1274 pips. And obviously we do not get out at exactly this swing low, so we would get out around there because this market retraced a lot. So what you're gonna do is we would get out around there. That is 1500 pips movement. we profited 500 pip. We lost 1000, we profited 500 pip. It is crazy. We got out around there, so this thing smashed us to the upside. So after TP series hit, I told you to close, to trail it to close, okay? After TP series is hit, trail it to close. TP series exactly right there. So this thing consolidated again and smashed it. After that thing, you can trail it to close, boom, to close, boom, smash, to close, and boom, smash, to close, and then this thing came back. That's out of that. That is a huge, not huge, but a nice profit right there. And then if someone didn't trail a lot, then if someone's, because I could sometimes leave my trades running, okay, Sometimes I leave my trades running and I forget about them, and when I return they have moved hundreds of pips. It is crazy. One time I checked my phone and it was, what the hell, it was hundreds of dollars right there. It is crazy. I was stunned. So that day I thanked myself that I didn't trail my stops, because if I had trailed my stop, I would get out and I would miss that hundreds of pips. As you can see, if you hadn't trailed this thing a lot, if your stop loss were around there and you let the market run, and around there you let the market run, this thing smashed up and look where it went. It's crazy pip. It doubled your entry riser. It tripled, it doubled riser. That 1,500 doubled and made 3,000 pips movement. It's crazy. It's crazy. That's a weekly time frame riser. So nice trade riser. That is nice trade riser. So I am showing you every trade. I am showing you every trade right here. Then what happened here? There is something that we missed. Maybe, yeah, and we didn't mix because we entered an up a trade, and then what happened? Closed bar. So as you can see, I never leave trades. I never leave any black box, because that thing didn't play out. Then, oh man, it's gonna show my weakness, bro. I'm not gonna show this thing to the people that are watching this, because they think that my strategy is weak. My strategy never gives any profit. It's crazy, bro. I think I should. I mean, there are some YouTubers that think like this, right? So they show you some cherry picked trades. It is crazy. When I first started learning about Forex, every YouTuber I watched was, they were winners. They were winning. They were showing their stuff, their shining things, their toys and everything, and they show blues everywhere. What the hell? This forex thing is great, bro. I gotta save money and I gotta participate with these people, bro. I'm gonna be rich soon. So that was my thought right there. But after trading for 5 years, I understood that that's not the case, bro. That's not the case. You gotta hustle, bro. You gotta hustle, and you gotta have some crazy strategy. You gotta have some crazy patience. You gotta have uh, some some money, right? You cannot trade a $10 account and expect $1,000 in next week, right? So people who got $10,000 in their accounts will double their money. They can double their money with a short period of time than you, because rising, I mean, uh, rising a $10 account to $15 account, it's crazy hard. To $20 account, $50 account, $100 account, it's crazy. From $10 to $50, it's crazy. It is very, very hard, because you are trading in micro lots, 0.01, 0.05, 0.09, and zero point 0.1 at most cases, because you don't want to blow your account. But if you got a $10,000 account, you can enter one lot, a lot, okay? You can enter a lot on most forexes, and on indices you can enter a zero point 0.5 or something, because on indices one lot means that's a huge money. One pip movement could cost you around, I don't know, more than $10 of one pip movement. One pip movement. It's crazy, bro. It's crazy. So those are the things that I wanted to tell you, right? So do we have any consultation? Of course we do. Of course. How do we connect this thing? Connect this thing, the whole thing. Actually, just a second. And this thing is very long. So what you're gonna do, you connect the short ones right there. So what happened is this thing broke up. You buy, supported, broke up again. So your stop loss down here, don't touch that thing. Don't touch it. This is abnormal. This is what I'm talking about. This is huge abnormality right there. Huge weak format. As you can see what happened, there is a source for everything. As you can see, we are catching the source right there. That's why our black box is so different than any of the other. strategy. It is very unique. It is very unique. Some could say it is derived from trend line breakouts or support and resistance. We might say that, yes. I discovered this thing by using trend lines like chart patterns, right? I use the chart patterns like bullish pennant, bearish pennant, bullish flag and bearish flag, and those kinds of numerous patterns. And my mind was, what the hell, bruh? What is this? I mean, you could see a lot of patterns. Even some exotic. I mean, some never heard things like diamond pattern. What the hell? Diamond pattern is crazy, bro. And when you do that, that thing will turn out to be a triangle, and that thing will turn out to be a wedge. Okay, but in this black box method, it is crazy, it is unique, it is very unique. You could filter out most fake signals, and you are utilizing these institutional stops, right? These are institutional stops. This is where they stop to buy. This is where they stop to sell, right? This is where they stop to buy. This is where they stopped what? To buy right there, not to sell. They sold it here because they want to get a cheaper price. They didn't sell it here to profit. They sold it here to get a cheaper price, and on their way to get out some traders who are trapped around here, right? So some stops will be triggered right here and then move up, right? So they will be the only one who will buy this thing with what? A cheaper price. Well, everyone is out around here placing their stops. So that's the some advanced sheet. So and we don't want to touch that thing. We don't even care about that thing. This is the only the black box is the only thing that I want to share it with you, and you will be amazed by its result. It's crazy. You will jump from your bed and no worries. There will be no worries, right? There is no trying to find the 100% winning strategy every time on YouTube. Before I discovered this thing, I was just messing around everything, right? So I was watching some FX Alex G and some Mamba FX and those prominent names, right? So but those people show some things that is working for them, but every indicator, they do not use indicators actually, but they are mostly using supply and demand zone, especially FX Alex G. He was using supply and demand zone to trade he turned 100, for God's sake, $100 to $300,000. It's crazy. And because of discipline, at last he blew everything out. So I mean, yeah, discipline is everything, bro. Discipline is everything. He entered almost 100 lots or something on one trade, and I think it was Australian or something. Then it melted and uh, it blew his account. So they use supply and demand zone, and Mamba FX uses some kind of breakout strategy, like this, the black. It's not like the black, but he uses some kind of chart patterns, like the triangle, the wedge, and the pennant patterns. And when that thing breaks, he takes a sell or a buy, right? So he profits from there, right? So you will minimize, or you will never look again on to other YouTubers for a strategy. You will never believe me. I'm telling you, I have never looked a strategy for a strategy on YouTube. Never. I have never. After discovering this thing, it is crazy. My mind is straight, and I'm making profits every time. It is crazy. Not 100%, but every time I enter, after some time I am in profit. It's crazy, it's blues, but sometimes that thing will turn out to be fake out. So it will turn to red. So and then we will take the other side of the trade because of our models, right? We got 4 models. So You gotta remember that. As you can see, nice buy riser, TP3 boom hit, and the nice hit rise. The same thing, okay? 50% run, 50% out, okay? Safe and sound, okay? Placed in your account, and trail your stops. That's it. Nothing complicated. There is no Fibonacci. There is no gun ABCD pattern. It's crazy. It's crazy. You don't want to mess around with those people. It's crazy. They don't know what they are doing. What do we have here? Three candles, right? The same thing here. You're gonna do, you connect it. You connect these three candles right here. What happened? Right here, you sell that thing. You sell that thing, TP hit, boom. TP hit, the same thing, 50% run and 50% out. Beautifully nailed it right there, TP, boom. So this thing came up, then what do? You buy. You buy this thing, and what happened? The beauty is that the third model happened and the second model happened. Break and retest, boom. But we don't care about that, okay? We don't care about that. When the breakout already happened past, and the second, when the second thing happens, that you should be wary, okay? Because when this thing broke up, because you profited on both ways. When everything is fresh and new, I mean, when the breakout is fresh, you are in high probability, right? This is a fresh breakout right here. Fresh breakout, but it was a third model right here, right? This was a fresh breakout, boom, we profited from there. And then a third model happened. Then the breakout is kind of now being fading. I mean, the probability is fading, right? When this thing leaves this consolidation, the probability fades and it reaches zero. Right here, it is zero. That's why it is again consolidating, because this consolidation is over. It is over. This consolidation for this too, for this move, not for this support right here. Right? This is for this move right here. Down, manipulate, and then boom right here. And then consolidated again right here, right? That's what you are seeing right here. And then did what? The same thing. It is the same thing, the third model right here. Let me visualize this thing for you. It is the same thing, bro, for God's sake. Look at this. Look, TP hit, boom, right there, nailed it. Even if you do not enter with the second model break and retest, what happened here is what? You enter the sell because of this consolidation, right there. TP hit. I don't want to measure that thing. You already know that TP is hit. So I don't want to kill time. Right? As you can see, TP hit, boom, and then you enter a buy. Where? Right, exactly, right there. Retested, boom, smashed it. TP hit, let the other 50% run, smashed it. Then you trail your stop half, this will get you out. That's beautiful, right? That's beautiful. And then what you gonna do next? Next, 1, 2, 3 happened, and 4, 5, 6. The same thing. You don't connect this thing. What you gotta do, you connect the equals. These are the equals. So what happened here is interesting. So what happened here is not a breakout. This is a fake out. After this, the market never looked back. Support, boom. It went to its business, right? So that's why I tell you to wait patiently, wait for an advancement. This is not a breakout. That is not a break. Wait for an advancement. That is a key right there. If you had sold that thing, then look what the market did. You would have lost your money. Just because I'm a nice guy and I'm telling you everything, you have saved a lot of money right there. As you can see, this thing faked out and moved up. You do not enter there. This is a little bit, so don't enter there. We want a huge move, right? Just like this one, a huge move, boom, buy, and then this thing supported around here a lot. Then if you have missed this thing, what you gotta do is you connect this thing again. Why? Now this is a huge consolidation again. This is a huge consolidation. So you can see this thing, you can connect this thing, the bodies. and then this thing moved up, you buy that thing and then moved up, right? So TP hit in both ways, in these candles, I mean in this box and in this box. TP hit, boom, and moved up and then consolidated where? Right there. What you're gonna do now, you connect like this. Now the wicks are very short, they are a little short, so what you're gonna do is you can connect the whole thing. You can connect the whole thing. This is a consolidation. There is nothing that you're gonna skip, or there is nothing that you will miss by connecting the whole thing. When you see a consolidation, connect the whole thing. This is not a single candle, this is double, which means, and they are equal, even worse, which means you gotta connect the whole thing right there. Okay, connect the whole thing. That's a consolidation right there, not down here. That's not it. That's not the consolidation. As it's up there. It includes up there. What happens if this candle comes up and trades up? You will get out because you didn't connect this thing. You will not lose anything just because you connected the whole thing. Only you will profit from that thing, right? Then what happened here? This thing broke. You sell that thing, and the same thing happens, right? So, and then let's come back here, connect this thing, the same thing, connect the whole thing. And in this case, what you're gonna do is you buy, and in this case you have lost money. There is no turning back from this. You're gonna get a loss. You'll get a loss. Okay, that's the reality. There will be a loss because the markets are unpredictable as hell. They are dynamic as hell. You cannot know where exactly the price will stop. You cannot know where exactly the price will start trading. So as you can see, we connected everything. As you can see, and what happened here is this thing broke out up. Never hit TP, came back, got you out of the trade. That is you entered right there. How much pip? 200 pip right there. 200 pip, and you sell it using the third model. You sell it using the third model, and as you can see, we had moved double. It even triple. That's 800 pip movement right there. Tripled that one. Quadrupled. Really? Yeah, we quadrupled because that's 200, that's 800 pip. That is 4 times our risk right there that we took. And then what happened here? Another consolidation. What are they? They are equal right there. They are equal. As you can see, what you're gonna do is now this thing can be connected just like this, right? Okay, let me, but in order to, that is why these wicks are here. These wicks are here to show you that the consolidation is all the way. It can extend all the way up, even there, up there. So you can see, even up. This is the consolidation. There is no worry, nothing to worry about. You gotta connect everything. Why do you want to connect the inside bars? The inside bars, they are not long. They are not that very long. If they were this long, then we would not assume. But they are short, as you can see, are short, very short. This consolidation encapsulates the whole thing, as you can see. This is how you do it, right? Connect everything. There is nothing you lose. There is nothing you lose. If you had connected it down here up there, then what you do, you would miss this thing, okay? But you connected the whole thing now. This is not a real one, so you protected yourself. As you can see, what happened here? We broke. Then what do? We sell. We sell that thing. TP never hit, we do not trail our stop, so we let that thing run. Stop loss up there. TP were exactly right there. TP will be exactly right there. Because those things are equal, those wicks are equal, we do not connect the bodies. We are using everything they got. I see TP smashed right there, let the other run 50% around there, smashed it halfway, This thing smashed it, then halfway. TP3 smashed right there. Then after TP3, you can do whatever you want. Do whatever you want. But just before that, don't really too close. But after TP3 right there, after this thing TP is hit, as you can see it consolidated as it always does, then you can't trade too close. Okay, that's beautiful trade right there. Oh my goodness, so where are we? I mean, we are a long way. We are a long way. So I think we should. Oh my! Oh my! Oh my! Okay, let me push a little fast. Okay, you already know what you gotta do. So all you gotta do is just connect this thing. That's it. Let me. That's consolidation. The whole thing because that thing traded up. We didn't trade up. It did. That's beautiful. Then what do we have here? We have something like this. They are not equal. Those things are not equal. You buy, TP hit, 50% half rise, you sell, boom, rise there. And then what happened? Another trade rise there. Third candle, three candles rise there. That thing traded up, I mean connect the whole thing. You sell, rise there, it broke the downside. You sell. That thing retraced and smashed your TP down. It is crazy. Why would some why would it do that? Why wouldn't it continue up? Because there is some unfinished business and we identified the Holy Grail, brother. We know the Holy Grail right here. As you can see, there is before hitting your stop, it never hit your stop loss. It came back and look what it did. It hit your TP instead of your stop loss because we are on the right side. We know what is going on here. That makes us unique. Unique right there. You can see beautiful trade right there. 50% retraced up there, then this thing will smash. What do we got here? The consolidation huge. That is a huge one right there. Why? Now that as you can see, that thing trade halfway. This is smash, this is smash. That is a consolidation. Smashed. Trail up, right there TP hit. Right? You can measure this thing. Why do we worry? I think this thing was not hit, but yeah, it was not hit. So what you gonna do? You wait. You wait for that thing. So supported and moved. Right there hit, I mean, it hit your TP right there. So nice trade. Nice trade. What do we have here? Another consolidation. How do we connect this thing? You connect the whole thing. As you can see, this thing moved a lot. So what you're gonna do? In this case, you have lost money. You have lost money because the fourth one broke and moved a lot. Moved a lot. But if you were in trade right here, then you do not enter right here because you are already right here in trade, right? So you don't touch this thing, as you can see, and you do not consider selling. Why? As you can see, it is supporting this thing. As you can see, this thing broke everything right there. There is a huge consolidation. I broke the upside and made the wick. Wicks are filled right there. So this is a support most likely. So you do not sell. But if you didn't enter a sell right there, I mean a buy, then the chances are you sold that thing. So you lost money right there. What you gonna do? You buy right there once this thing breaks up because of the third module. That's a freaking fake out. You buy that thing, smash TP, then trail up, trail. Finally, this thing will get you out. If you trailed right here, then you are safe. Moved up, you trailed, this thing will smash you out of the trail. So, what do we have here? Nothing, absolutely nothing. It is crazy price action, right? It is crazy. You pass this thing right here. Nothing here, absolutely nothing. What do we have? We have something. Why? Because it's trading inside this thing. It's trading inside this. It is an inside bar right there. So you sell that thing is the same thing. Beautiful trade. Right there is the same thing. you connect the whole. As not equal, you leave it, TP hit, boom, beautiful trade, nothing. What do we have here? Beautiful trade right there. Why? Connect this thing, the whole. They are not equal, long wicks are left, so you leave that thing, smashed, beautiful. Another right here. It's everywhere, guys, it's everywhere, no joke. As you can see, smashed, TP hit. Another. I'm going like this because as you can see, the time is running. As you can see, this is a nice trade right there. And here we had 1 2 3, right, 4. So in this case, what you're gonna do, you connect it like this. Exactly, this thing is smashed up. That is a long week. You do not connect the whole thing right here, right? If you want, you can connect it. If you want, you can connect it. Then what happened is this thing moved a little bit. It never moved a lot. So what you're gonna do is you never take this buy. You will never take this buy. You sell this thing. You sell this thing, and right, then this thing left. So you sell, you are in profit. So that's why long wicks are not touched. Okay, no, long wicks are not touched. So in this case, you connect the bodies only. TP right here, boom, smashed, and then you buy that thing, the whole thing, because of the wicks are not, because they are very long. You do not connect that thing. That's how you do it. And then smashed it upside, the same thing. You can sell this thing by using the Force model, but I don't recommend this. This is crazy, as you can see. But this thing took that swing slow, so this is over. This consolidation is over right there, because this thing consolidated and made the third model and went up right there, finished, and then came down again. So nothing here, something there. We got a black box. Buy. Is there nice buy? You buy that thing, nice, boom, beautiful. There again, you connect the whole week because they are required. So you can see a lot of back and forth, back and forth, and then TP hit right, nailed it, beautiful. And then if you had missed that, you can connect this whole thing, and you would enter a buy again. Where exactly? Right there. TP hit, the same thing. Nothing new. There is nothing new. So you can see before moving up, what did it do? This thing smashed the upside. So you buy. Because you buy that thing, TP hit, then you sell that thing. The same thing. Then other consolidation. You connect that just like this. As you can see, it's never moved a lot, so you never take a trade. The key rule right there. Key rule. Key. It's very, very key. And see, you sell this thing, boom, TP hit right there. As you can see, we are selecting the consolidations, not everything. Right there, you sell that thing again, boom, smashed. Then 3 candles. Beautiful. Okay, come on, let's pump it. You can see, nice right there, boom. Smashed it, nice trade right there, because that thing traded down 50%. Oh, nice buy, boom, and never stops. It moved up. It's crazy. Then you can connect the whole thing, but you can see the whole thing. If you have got this thing consolidating, this is a huge consolidation. You can do this like this. This thing moved up, and then what did it do? Is it never returned? You could have lost money because this is not a right consolidation. On the monthly, this could be a consolidation, but on the weekly, as you can see, this is back and forth. So never select these kinds of trades. As you can see, this is trending. Never select. Never trade that thing. Trade these kinds of things. These are compression right there. Huge compression, and this compression, look what it did. It brought this huge trade right there. It's huge. So you can see nice sell, TP hit, boom, smashed it. And you got 3 candles. Why? This candle long, this candle, they are the same. They have traded the same way. You connect the whole thing right there. TP right there, nailed it. Beautiful. Right there, nice buy. Why? That trade started as the bottom below and boom, buy. Smashed it. Okay, let's come back here. We got a beautiful sell right there. It's just beautiful. And the most beautiful thing, it never hit your TP is above there. Not exactly. That's why it is not exactly. If it was exactly as the point, look what it did. It smashed you out of the trade and look where it went. It went to the bottom of the bed. It's crazy. The same thing here. Sell, TP hit right there. The same thing here. Buy, TP hit right there. The same thing there. Why? Because it traded down, bro. This thing traded down instead of going up. This thing traded down right there. Boom. Nice buy right there. No trade right here. Trending. It's a trending. That's nice. Black box right there. Put it up. Enter a buy. Beautiful execution right there. Put it up. Enter a sell right there. Retest. Boom. If you had missed that, enter a sell again. TP. Boom. Smashed right there. Beautiful. Beautiful. That's beautiful. Then what happened? It's a huge price action right there. That is a huge price action right there. What you gonna do? You buy, you sell right there. You sell that thing right there. What if you sold that? Your trade starts around here, right there, right there, at that candle trade. Right there, then this thing, could you sell that thing? Stop loss above there, and this thing smashed down, the downside, to the downside. And see the same thing here. You sell that thing, TP smashed. TP smashed. Look right here, we got the black box, TP smashed. Look right here, this is the black box right here. So you can see TP smashed the upside. As you can see, such a huge trade right there. TP smashed, and then we got another black box here. The same thing, TP smashed right there. You can measure this thing, place it up there. As you can see, that doji hit your TP right there. So beautiful. That is beautiful. The only way that didn't work is right there. And you could have sold this thing by using the third model. That is the only way that it didn't work, and you sell that thing and your money is back. Right? And then another. Right? This is how you connect this thing. Okay? You do not connect the whole thing. This didn't trade down. So in this case you sell this thing. But I think TP was not hit. Right, so let's put it down here. Oh, smashed there by that doji. That doji smashed there. That doji is there to make sure that this thing is filled. It's crazy. The same thing here. TP smashed, boom, and we got another trade here. Same thing. It never gets old. And see, boom, smashed. Another trade here. You can see this as a bigger picture, just like this one, because of this consolidation, 3 candles, and this traded down. But even more, you can connect this thing and enter early rise, early or later risers and buy. Okay, another consolidation was they traded up and up. Right there, started. That's where it started. Boom, right there, smashed. Then right there, we got another consolidation. That is it. TP smashed right there. Boom. And third model happened right here. Right here, you lost money to the downside because you were in profit, but it came back. And you lost money and you enter a buy right there, smashed the upside, doubled your lost money right there. Up there again. Sell, TP smash, let the other run. Boom. This thing will get you out of the trade. Before it moves a lot, so as you can see, the same thing here too. What you're gonna do before this thing, we buy TP smashed. We can measure this thing. TP hit. TP hit, not smashed. Okay, TP was not hit exactly. Okay, right there, it was not hit. Yes, it was not hit. Wasn't hit. So that faked us out. If you had entered around here, then you do not enter a sale. I mean a buy riser because of this thing riser because you are already interested. If you hadn't, then you sold, you bought this thing, you are in profit, and then TP too close. When this thing is too close, then you gotta trail that thing. You gotta trail that thing. You'll thank me later. As you can see, this is very close right there. Trail your stop up there. Okay, it will not hurt you. It will not hurt you. The worst thing that could happen is the break and retest happens, right? It will come back and retest and it will go to your direction. And that is the worst thing that would happen. This thing traded up and then smashed down, so as a valid black box right here. Another valid black box right here. Smashed, boom, TP right there, smashed. Another valid black box right there. That's a huge consolidation. Sell, boom, smashed it. So this was a huge sell, selling campaign that the sharks took. You can see trail smashed, then TP smashed, then your stop loss up there. This will get you out of the trade. You don't care. I'm showing you everything, every consolidation that there is. As you can see, this thing, what did it do? This thing happened to be the fourth model right there. As you can see, this thing moved up. You can measure the TP and the same thing, never hit the TP. So in this case, you lost money and you enter a sale, and this thing retested and it moved it down, right? It moved it down. So we are finishing. So bear with me, guys. We are finishing up. So a little bit. We are in 2023 already. We will be in 2023 already. As you can see, 1, 2, 3. This thing moved up. Nope, nope, not good. That is not a consolidation. We can have a closer look around here. If we have something. Okay. Okay, this thing came back. Nope, it's not. It is not that because of it is trending up and trended down. We don't want that. We want this. on these kinds of movements. This is a consolidation. This is valid black box. And what happened? It broke the upside. You place your TP and TP hit rise here. Beautiful. This thing broke the downside. This is a typical what for the model rise here. It broke the upside and then it broke the downside. Alright. This is not even the fourth model. It is not the fourth model. It is not in our model even. It is not in our model at all. Okay. This thing crashed up, then moved down. That is all. This consolidation is over. And then this consolidation moved it up and then melted. So right there, this consolidation's intention was ended right there, and then a new trend started. So downside. So nice trade right there. Then you connect this thing again, 3 candles. You sell that thing, TP smashed right here, so beautiful. You come back here, you connect this thing, connect the whole thing. So in this case, I think didn't move a lot, you do not take trade. Or if you have used this thing, you can take a trade and your TP will be hit, I think. But I recommend you to connect everything. Connect everything, right? So you can see TP was not hit. So in this case, connecting everything is great. So you can see never moved a lot, so no trade. We enter a sell because this thing closed down and retested. TP is hit right there. No trade, 2 candles. Right there, 3 candles. Boom, sell. Right there, how much? 3 candles. Right there. Boom. Now you lost money to the upside. You bought, right? You bought that thing and lost money because we are moving down a lot. We didn't even analyze the trend. We didn't even look on the higher time frame. We didn't even look on the trends, moving average, the RSI. Nope. We are just identifying the trends and using our black box to filter out. We filter out a lot of fake outs and a lot of false signals. And as you can see, lost money, but you enter a sell, and then as you can see, retested, boom, TP smashed rising. If you had missed that thing, you would enter a sell riser again. You'll enter a sell. So you can see this thing again, since we are in a downtrend, buying doesn't make sense at all. And the TP never hit, as you can see. You lost money again and you enter a sell, boom, smashed. TP doubled riser because this you bought that thing, right? Then it smashed the downside, so this is double of this one, doubled. Beautiful. Then 1 2 3, you connect this one, 3 of them, connect the third one too. As you can see, this candle came back, TP hit riser, supported. So TP hit and they got you out of the trade riser, so you didn't take a trade. When that is smashed and moved away, you can enter a sell because of a rejection. If you say rejection because of the second model, we got models, so you can buy that thing again after getting out of profit. You are buying with your profit, not with your previous money, so you don't even give a damn if that thing blows. So you can see, you bought this, you buy this, boom, And finally we reached the last part, and that's beautiful, that's exciting, exciting. As you connect the whole thing, sells this thing, as you can see, it was recently on 2023 June. And finally, beautiful trade. You do not get any cleaner than this. This is beautiful. This would have been beautiful if you had seen it on the weekly. When this thing breaks, I could have bought that thing the whole week, and I would dance the whole week with my profits right there, as you can see, because that thing started moving on Monday. It's traded down. That's where you enter right there when that thing breaks, and your profit is chilling. You are chilling, bro. You are chilling. As you can see, you can measure that thing. That is a huge big price. That's close to 300 people in a week, bro. In a week, that's crazy. And quite recently, the same thing happened again. This thing. I was watching this thing, and it's crazy, bro. It's crazy. This thing, I didn't discover this thing before. I mean, the black box. I didn't know about the black box earlier. So what I did was I was trading with trend lines and everything, and I mean, here a MACD, here something, here um, some indicator, here another indicator, and here there was some ICT concept, and here there is something. Oh man, well, liquidity grab, crazy, bro, crazy. I don't want to talk about that. It's crazy, and then this thing got out of my hand. If I had seen this thing, look this, it's crazy. It is crazy. Never assume, I mean, you would never be worried after that thing broke. After this thing, as you can see, it moved up, smashed down. You are in profit, and the crazy thing, it smashed down again. It's crazy. I was watching this thing, and what the hell are they doing, these people? They are pushing it up and bringing it back. On Monday, you would see that huge candles moving higher and higher, bullish. Every structure is being broken. On on Tuesday, you would see that they show you a huge, big red candles coming back, come crashing back on those green candles. It's crazy. And look what they made. They made a week crazy. So as you can see, TP was not it, unfortunate, and on the second week it smashed it. But if you are trading on the lower time, because you you could be trading on the higher time, I mean the lower time frame, because I think most of you who are watching my content and other YouTubers content or other traders content are intraday traders. I can see that. Swing traders are very handful. There are a handful of them, and they are very limited. They are very small in number. But intraday traders, there are a lot of them. So you could have entered by 2 hour time frame, so you would get out right there because of the lower time frame trend, right? You would be a huge profit. Some people would fear that swap and get out after getting some profits. Oh man, 6 o'clock is around the corner, man. I gotta get out, bro. This profit is enough, bro. I would catch another one next day. Okay, let's get to sleep, bro. I mean, they do that and they close the whole thing, right? So trading on the lower time frame, there is no waiting for this TP to be hit. Okay, you will not wait to be hit because you are in the lower time frames. Okay, and this thing smashed up because weeks are gonna be filled. Look, this week, believe me, this week will be filled. Look at this. Just look at this one. Just like this one right here. This thing came back up, rushing up, and finally covered everything like a freaking door. and nothing here, nothing here, right? There was a couple of candles, nothing. We didn't have any trade right here. Okay, maybe on the lower time frame like the daily we would get something. So this is it. Thank you very much. This is euro dollar on the 4 hour, I mean on the weekly time frame. As you can see, we had crazy setups, and on those, in this all setups only we lost how much? I don't know, around 4 or 5 setups, 5 or 6, yeah, 5 or 6, and almost immediately we got them all back. We got everything all back, right? As you can see, a lot of setups around it, and all of them are beautiful. They are beautiful. They are just beautiful. And all of them, all the losings were giving us profit too, but we were never smart enough to protect ourselves. So as you can see, that's it. Thank you for watching. So I am very tired now, and I will catch you in the next one. In the next video, um, we will be on the daily time frame. Okay, we will catch that daily time frame, and I'll see you next one. Thank you for watching. Let's go. Let's get it.